Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be following on from last week's video and showing you exactly what's happened since then, and also going through the big picture view of where we're at, as well as giving you a detailed explanation of where we could be heading in the next few days and weeks. I'll also try and cover the alternative investments, mainly Marathon, Riot and Neo. I don't think we'll have time to go through a wisdom bite today because we've got such a packed program. I'd rather focus on that in the last few months of this bull run. And if that sounds interesting, then without further ado, it's time to put everything aside, grab yourself a Snickers bar, a cup of tea, eyes on the screen, and let's get cracking. But before I begin, just a normal polite reminder, please remember everything in this video is for educational purposes only. Nothing in this video or any of my videos should be taken as financial advice. I'm not anybody's financial advisor, so please do your wide research before making any investment decisions. I'm going to start today on the weekly chart with the 21 weekly EMA, the exponential moving average. And the reason for that is that it's just turned extremely bullish, and the reason for that is that we have an extremely bullish candle that's just forming over the last week. This will be closing tonight, 1 a.m. UK time, and the reason why this is very bullish is that if we look historically, and because we know we're in the final stages of the current bull cycle, and if we have a look at what happened to the price once it left the 21 weekly exponential moving average after coming to find support there. Let's have a look historically. This is the last bull market in 2017. Once we found support and left this 21 weekly exponential moving average, this was the beginning of the blow off top that we got just a few weeks later. This was September 25th, and we're in the first week of October, so it's not too far away that it could well be that we end up with this type of a blow off top coming up. If we look further back, we found support here finally. Guess where? In September. And then in October, we made the first candle that was well above the 21 weekly exponential moving average. And this is what it led to, a blow off top. And this is what I'm going to be expecting in the next few months. Okay, in the last video, I also showed you this chart here with the log growth curve and these various bubbles dotted all throughout the last 11 years. And I showed you quite clearly that every year, the price action in the last 3 months, October, November, December, always seems to come either at the bottom of the log growth curve or at the top here. So in this first Bitcoin cycle up to December 2013, we can see that we had 1, 2, 3 bubbles ending up at the bottom of the log growth curves. And the fourth one was at the top here. So we had 3 followed by the fourth at the top. The next cycle was exactly the same, apart from this bubble here, which was the only one throughout the 11-year history that we've had, which was neither at the top nor at the bottom. But these were the 3 before culminating in the blow-off top on the fourth one here. And currently, it's following the same pattern again as the first 2 cycles. So we've had 3 bubbles, i.e. price action at the bottom of the log growth curve in the last 3 months of each year. And now we're on the fourth one. And the question is, are we going to end up at the top just like the previous 2 cycles? This chart would suggest that that looks like very highly likely to be the case. And if we have a look at the current price action here, where we are now, in last week's video, I said that we need to get this monthly candle here up to this level here at 54,000. This is where it's currently at the moment. And we would expect a little bit of a correction here. So you've probably noticed in the last few days, it's come up to 54, 55, and it seems to be finding some resistance here. But once we get above this, then we're clear to go to much higher levels. But this is very important that we get above this orange line. As I showed you last week, in the last bull market, This is the October candle here. If I show you a bit closer. This was the October month. We started off, the September one closed just below the orange line, but the October one took it well above it. And this is what I'm expecting here, to go above this orange line by the end of October. So certainly the 54,000 is proving to be the stumbling block for the next few days before we eventually blow up. And we'll do a closer inspection of the price action here later on in the video. But certainly the 3 yearly closes followed by a blow off top in each of the cycles, here, here, and possibly here, looks imminent currently as well. And this chart gives us a very good overall picture of what may possibly happen very shortly in the next few months. Okay, so I'm now going to show you a chart that will actually blow your mind. So if I just explain, the pink line here, here, and here are the halvings that occurred with Bitcoin here on November 26, 2012. The second one here in July 2016, and this one last year in May 2020. So before the halving, we made an all-time high, the first all-time high here. And if we draw a horizontal line here, as we can see, after the all-time high, we had a large correction up to the halving here. And after the halving, we came up to break the previous all-time high here. After which, we had another major correction before a blow-off top, which signaled the end of the first bull market for Bitcoin in December 2013. The reason why this is very important is because in the next 2 cycles, the same pattern has been developing. So for instance, if we take this as now the all-time high at that time and draw a horizontal line, just like here, we went into the bear market and then came up to the halving before we broke the previous all-time high here. And then after this, we had 1, 2 corrections, although we had one over here, one very big correction. We've had 2 smaller ones here before the next blow off top in December 2017. Now you're wondering what this red line is, but you can see clearly that after the first all-time high, the price action followed this trajectory all along this trend line. Similarly here, we had the bear market, and then we went on this trajectory before we broke the previous all-time high, going on to the blow-off top here. In the last 4 years, you can see clearly it's followed the same pattern. So currently, you can see that we made this all-time high in December 2017, had the bear market correction here, we had the halving here, made this trend line. After the halving, we came up to break the previous all-time high here, and now we're having this correction before we have a blow-off top anywhere there. So follow this very carefully. A blow-off top, horizontal line, correction, halving, we break the all-time high, have a major correction, blow off top, bear market, halving, break the all-time high, 2 major corrections, then a blow off top. Once again, bear market, halving, beating the previous all-time high, and we've just had a correction. And I've mentioned many times that the current cycle seems to resemble the first cycle much more than the second cycle. So in the second cycle, we had 2 corrections. In the first cycle, we had 1 major correction here. And here, we've had a major correction of around over 50%. So it looks very much resembling the first cycle. And if that is the case, then we are now on our way to the blow off top very shortly in the next few coming months. You may have noticed that we've also been making this trend line ever since the COVID situation here. So whenever we've come onto this line here, I remember when I made the video, when the price was around here, I said with a very high degree of probability, we're going to bounce off here and move higher from that point onwards because of this very strong trend line. Obviously, the possibility is always there that the price can go lower, but the trend line tells us otherwise, that the price was going to go much higher. And this is exactly what we've done here. And this trend line will prove useful further along up here when the price comes back down again. Moving on to the total crypto market chart, and this includes Bitcoin, Ethereum, and all the other altcoins in this space. We've been looking at this chart for the last few weeks, and I started showing you this when we were coming up to this line here, that more than likely we're going to get rejected. And I drew this trend line here, this blue line, that once we get rejected from here, more than likely we're going to find a bounce on this line here, which is exactly what we've done at that point. And the idea was that we're going to create a double bottom before we move on. So this was going to be the double bottom W pattern, which looked very, very bullish before we moved on. So in the last few weeks, this is what's happened now. You may be aware that we're forming a very powerful pattern here, and that is the cup and handle. This is one of the most powerful charts and one of the most powerful patterns you'll see in any stock market chart. Having made this cup and handle, look where this candle is here. If we look closely, we're now just on the cusp of breaking out. We've protruded it once this week, but having made this cup and handle, we're just on the launch pad to take off, as this candle is showing here. So let's wait and see, but certainly once we break this neckline of this cup and handle, we are really going to be taking off. Someone asked me where the total crypto market could go to up here when we have a blow off top. If we take the Fibonacci Extension tool and take it from the bottom of this cycle, which was here around December 2018, and we take it to the penultimate high, which was this one here, and to the bottom for the trend, we can see, when I showed you in the last week's video, I said that more than likely we're going to end up in the first or the second part of this Fibonacci retracement, and there is a possibility of coming even to this third line. So this is the real possibilities here. So this is the 2.618, the 3.618, and the 4.236. So if we go to the top line here, we're more than likely to have an 11 trillion market cap for the total crypto market. If we come to the second line here, it's likely to be about 10 trillion. And the third line here, the minimum I'm expecting is $7.5 trillion. It may well be we go a bit higher, but this is a very good guide. I would be expecting around about the 11 trillion mark in the next few months. And we're currently at 2 trillion. A quick look at the Bitcoin dominance chart. Quite a lot of people ask me about the altcoins. What should we do? Should we be carrying the Bitcoins or the altcoins? Well, this may have a clue here. It all depends on what you want to do. But if we go to the previous cycle, this is where this pink vertical line is where Bitcoin topped out here in December 2018. But before then, from September, October, we can see that Bitcoin dominance increased, then fell, increased, then fell, and then topped out here, which was followed then by the bear market, and the Bitcoin dominance fell very drastically. It seems a crazy thing to do to second guess where this is going to go in terms of should you hold Bitcoins or altcoins. As far as I'm concerned, I've always held 95% in Bitcoin related assets as well as with 5% altcoins. So it seems to me that just like here, the last 3 months were up and down. So every time Bitcoin went up, it allowed the altcoins to catch up. And then Bitcoin went again, and then the altcoins caught up again. So this pattern seems to be, look, maybe continuing here until we have the ultimate blow off top very shortly in December time. So everybody has their own decision to make of what they should be holding. Certainly nobody can give advice as to when it's best to transfer over from Bitcoin to the altcoins and vice versa. It is worth noting that with Bitcoin potentially going to be going to a blow off top in the next few months, it's like a train coming at you and you're making a decision to go against the train. You're not going to win. So to go against the trend of Bitcoin going up, to try and second guess the market, to go in and out, and try and catch the bottoms and the tops seems a very bad idea to me. But everybody has their own decision to make, but you must also then face the consequences of that. As everyone knows, I'm a long-term holder, and these next 3 months are going to be absolutely crucial, and holding may well be the best decision anyone can make. Before I go into the Bitcoin analysis in the shorter term, I'm going to have a look at the Marathon Digital Holdings, which is one of the Bitcoin miners. And I've shown you this many times before. So basically, we're making this neckline here. We came up to this around the April time to create this double top from a previous high back in 2016. So this was an obvious point of a rejection before we come back again and then go to the north side. But if we have a look at what this is forming, as I've shown you before, we're making this cup. We've just had the handle with this correction here, and we're now breaking up here to test this neckline here, this red line that we tested back here in December 2017, where we topped off with Bitcoin. So I'm expecting, with a very high degree of probability, as Bitcoin starts to move higher, we're going to see Marathon move to the upside very, very quickly to test its previous all-time high, which is currently at around about the $42 mark. So we're currently at 39, and we're coming up to its previous bull cycle high of 42. And once we go past that, then we'll just have to navigate through this 57.5 that we got here back in April. And then it's just blue skies ahead after that. So how high can this price go here? If we'll use the Fibonacci Extension tool to go from the bottom here of this cycle to the top where we came to 57.75 around here, to the bottom of this correction that we had, now we can see top line is telling us that we could reach anywhere around the $256 mark. And the second line is at 221. Now this doesn't take into account the fact that the Marathon Digital Holdings and the other Bitcoin miners are a very different breed to Bitcoin, because these companies are mining Bitcoin at around about an average price of $5,000. So every time Bitcoin goes up, there is an exponential component built in with Marathon Digital Holdings and Riot Holdings, as well as the other miners, Argo and Hive blockchain. And the way to explain this is that if we accept that Bitcoin is at 50,000 currently, and it's taken Marathon Digital Holdings 5,000 to mine it, then currently that $5,000 Bitcoin has gone up 10 times here. 10x, because the price is at 50K. Now, if Bitcoin goes to $200,000 from here, this Bitcoin that's mined at 5,000 and continues to be mined at 5,000, at this point will be 40x from this Bitcoin that was mined at $5,000. However, if you look at the Bitcoin, when Bitcoin goes from $50,000 to $200,000, that is 4 times from this point at 50 to 200. However, the $5,000 mined Bitcoin from the same point, i.e. from 10x to 40x, has gone up 30x more because of this exponential factor, the fact that even as the price of Bitcoin is going up, it's still being mined at $5,000. And hence, we should, and the markets don't always do what they should, of course. So my view is, and I stand to be corrected, that the price of Marathon should reflect this extra bit by going much higher than the levels that I've given you. So while we're expecting on a normal basis for it to go to about $250, it should actually go much higher. And the price I've given you in the past has been around about the $600 plus. So only time will tell whether this plays out or not, but that's the understanding I have. And maybe it doesn't play out like that. We don't know. But this is what I would be expecting for this calculation here to play out over here. And the same goes for Riot blockchain as well. As you can see, it's forming the same pattern here, the same bottom, the same highs, the same neckline, the same cup and handle, and we're about to break up here. So it follows Marathon very much. However, you may have noticed that Riot has underperformed Marathon, and that's because in the last few months, Marathon has added continuously more and more machines, so therefore it's producing more and more Bitcoin, and that is being reflected in the current price of Marathon outperforming Riot. And everybody has to make up their mind which one they want to be on, whether they want to be on Marathon or Riot or both. And only time will tell where both end up. But certainly, if you're holding Riot here, you'll do very, very well up here. But compared to Marathon, only time will tell in terms of their performance. Okay, a quick look at NEO. We had the all-time high here at around about the $210 mark back in December, January 2018. We've had the bear market for the last 3.5 years or so. We tried to come up and actually hit that all-time high, failed to do so, but have made this cup and handle here. And we've just broken out and come back and retested this level here. So we are now on the launch pad to be starting to go back up to these levels in the next few months. Originally, I recommended it around about the $23, $24 mark here. But as we can see, it went all the way up to around about the $145 mark. But since then, we've had another correction back to these old levels of 23, 24. But we can see a bullish pattern developing here, as well as the cup and handle. We're creating a double bottom here, ready to take off again. And certainly I would be a holder for NEO simply because there is this now trajectory to be going to the upside, which is obviously very bullish when we know that Bitcoin is now moving towards the higher side as well. So this is all looking very, very bullish to me. And only time will tell how far this can go to the upside. And if we do a Fibonacci extension tool here to take it from the bottom, this point here, to this high and this low down here, we can see that the top line here is giving us a price of about $641. Certainly, I was expecting a lot more than that, and it may well be that we go much higher. Certainly, this is a good guide price to be aiming for when we're down here at the moment. And the lower prices are the 3.618 at $551 and the 2.618 at $405. So certainly in this range would be a good guide for this to be the target for. So we'll have a quick look at the analysis of the daily chart. And what I want you to notice here, because it's going to help us in the future at this point here. When we get to here, this here is going to help us very, very much. So please take a note of this. So what we've done is that from October down here last year, we've been on this trajectory. But in the midst of this rise, what we've done is to create key levels of support and resistance along the way. And the ones we need to really look out for now here is that when we came up to this point here, the first point of rejection was here, the second there, the third, and the fourth. Now, the reason why these are important is because of the following. So make a note of this. As we came up to this first correction here, the reason why this is important is that at this point, we got an aggressive sell-off down to here, these levels. So that told us that this is going to be a point of key level of support and resistance in the future. Similar thing happened here, similar thing happened there, and as you can see, similar thing happened over here. So when you see these peaks, the first thing a trader should do, a good trader that is to actually mark out the key levels of support and resistance at this point here. So once we established these key levels of support and resistance points, we can see quite clearly that every time we've come down and gone up from these levels, this is what's happened. So this level was important because look what happened. When we got rejected here, the price came back all the way down almost to this level here. And that's why in the many videos, when we established this, I was talking about the $41,000 and the $42,000 mark. and that became relevant over here. And as you can see, if we move to the right here, these 2 points became critical here, even there, over here, over here. So one point there gave rise to all these points of resistance and support here. The second one over here, you can see quite clearly, we got supported here, got rejected here, and we're now coming up to that point over here. So guess what? This level here, which I've been giving you in the last few weeks, or 58.59, we're going to find some relevance and importance here. And it may well be we have a bit of a correction at the 58.59 level. I'm expecting that. However, having seen how it went through the $52, $53 mark over here, depending on the momentum and the demand, it may well be we go through, but certainly with a higher degree of probability, we'd expect a correction at the 58.59 level. Then this level here has given rise to this level of rejection, this level of correction, and again, we'd be expecting another one here at around about $61,000 mark. And obviously we've got the $64,000 all-time high, which will then create a double top here, which we normally would get a correction at that point. So you can see that what happened over here is now playing out over here. Another important line that we will be coming across is that as we came up here, another line we must be aware of as we came up here, that will be a relevance up to this point here, will be the fact that when we came here, we created this head and shoulder here. And if we draw the neckline of this head and shoulders, we can see that there are 4 points here. Now this is a line that nobody's drawn out there, but you'll see that it's going to come and play a very major role around here. And certainly, as far as I can see, with these number of points at major points along the price action, certainly I would expect this to play some relevance or quite a major important role up here. And this currently would be at around about the $65,000 mark. So it may well be that this is the confluence that we're waiting for here. That will be the double top with this $64,000 mark here. And this is where we see a little bit of a correction before we move higher. So if you do mess about on the charts, then draw this line here, because this is going to play some sort of a relevant role up to here. And finally, we'll have a look at the 1 hour chart so we know exactly what's happening currently. We've obviously come up here and broke through this $53,000 mark with such an incredible rise here. And since then, we've been forming this upward trending channel here. Now, normally this kind of pattern is a bear flag, so it would fall back downside, which obviously can still do that. However, when Bitcoin's in a bull market, we tend to get this kind of a rise and then this type of a pattern, and then it becomes a continuous pattern to go like this here, rather than to come up here and then have a fall. So currently we're in this channel here. We made a double top at this line, so we're just waiting for this channel to come back and retest this level around about $56,000 before we move higher to our next target, as I've just said, $58,000 to $59,000. So if we zoom out, these are the levels I'm expecting: 58, 59,000, 61,000 around here, and then obviously at the $64,000 mark. Maybe we can meet these targets here, 58, 59, 61 and 64,000 in the next few weeks. Let's wait and see. We haven't got time to do the wisdom bite for today. We've gone on long enough. But I thought it was important to do a much more detailed analysis this time. And if you found value in this video, then please do remember to like and subscribe if you haven't already done so. If you have any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.